Your VA disability compensation just increased by 2.5% for 2025. This boost not only puts more money in your pocket, but can also enhance your ability to purchase a home with a VA home loan. In this video, we'll explore how this adjustment impacts your home buying power and what steps you can take to maximize these benefits. Now, if you guys can, drop a comment if you feel the COLA adjustment made a big impact on your overall finances. Now let's break down what this 2.5% COLA means. So COLA is the cost of living adjustment, especially if you're new to getting VA disability. Just if you received it in 24, it will adjust annually, but you really need to track it because it's important to understand your overall financial health. So the cost of living adjustment is an annual adjustment the VA puts on for VA disability compensation designated to offset inflation and maintain the purchasing power of veteran benefits. Now, the Social Security Administration announced a 2.5% COLA increase for 2025 that actually is effective December 1st, 2024. Now, this impacts your VA disability compensation. Now, let's go over some examples of adjusted compensation. So, for example, if you have a 50% rating with no dependents, your monthly compensation will increase from $1,075.16 to approximately $1,102.04. Now, similarly, a veteran with a 100% disability rating and no dependents will increase from $37.85 to approximately $3,831.30. Now, I'm also going to drop a link down below so you guys can get information from the VA's website on this increase and also compare it against your prior years so you kind of see where that average trend is, because that also kind of helps you plan for the future, especially as we have inflation and prices go up. And this also allows you to stay on top of things for maybe getting involved with your local politics to be able to get that number even further increased. Now, let's talk about how VA disability compensation affects your qualification as income for a VA home loan. Now, VA disability compensation is considered stable, reliable, and tax-free income, which can be used for a VA home loan. Even if you receive it that day, you can use that income with your award letter. Now, it doesn't matter if it's 10% or 100% permanent in total, but I want you guys to note something very important, and now this is for yourself. If you rely on that income and you're not 100% PNT, now this is for the most part, your rating can change. Lenders view your disability as favorable because they consider it consistent and tax-free status. Now, lenders can gross that income up by 25%, which does lower your overall debt-to-income ratio, but there's something that you have to know with VA home loans, and it's unique to VA home loans, is they look at what's called residual income. Now, this is gonna be your take-home pay, minus out any taxes that you have, and they also look at the square footage of a property to determine your residual income. Now, that's 14 cents per square foot. So this is why we get a lot of phone calls from folks, because they may be going through the approval process, get approved with the lender, halfway in or towards the end, like a week before closing, they get denied because the lender didn't know the small details involved with a VA home loan. You truly need to be an expert in this field in order to have a successful impact. So let's talk about how this increase impacts purchasing power overall. And the easiest way to do that is to really look at this with an example. So I'm going to go back to our prior example talking about a veteran that receives 100% disability compensation. So in 2025, that income will increase by, or has increased at this point, by $93.45 a month. Now, let me show you guys a tool here that I use myself when I'm looking at what the current rates are, so you guys get a good idea of where things stand. So I go to Mortgage News Daily, and I'll I'll also drop a link down below. And what you guys are going to see that I'm going to go down to where it says the VA rates, which right now as of this time, but again, they're shifting constantly, shows the average rate of a 6.41. So what I'm going to do is I'm going to take out my trusty old school calculator here, my HP 12C Platinum, and I'm going to run the numbers backwards, because that's what you always want to do when it comes to understanding your financial picture. It's not always, well, what's the max I can qualify for? You should know what your max is based on your budget, and you want to work backwards. And this is where we use the calculator to be able to do that. So I take the $93.45, okay, and I put that in as my payment. Then I'm going to take the interest rate of 6.41%, which is the average that we see on here, right? Because we need something to work with, and this is for educational purposes. And I'm also doing a 30-year mortgage, right? So that basically affects your ability to purchase a home by $14,924.28 as of what these numbers I'm using. And obviously, as rates go down or up, that number is going to adjust. Now, something to note, now that is for the overall number. So let's just say, I'm going to round this up to make it easy. So let's just say $15,000 in purchasing power. So if a home is $200,000, now you can go up to $215,000 based on what the new amount is, okay? Now, there's also something important you have to know, and I just dropped a video on this talking about 2025 predictions and what's happened in 24. Now, in 24, the average property appreciation was 5.7%. Now, they're projected to do the same all throughout 2025. Now, obviously, that's subject to change, and just note that every market is different, right? Some markets are going to have below average, some are going to be steady, and some are going to be above average. Again, it really depends on your situation. And trust me, there's plenty of affordable housing that's out there across the country. I look at real estate on a daily basis. Now, let's talk about a 2.5% COLA increase versus home appreciation of 5%, which is not a good situation, especially if you're on fixed income. Now, this means over time, and what I want you guys to do yourself is look at the data and look at the historical data. The longer you wait, the same you'll pay more for the same house, not only in the purchase price, but in your monthly payment. And I'm sure, just like me, there's people out there that say, I wish I would have bought at this time because it was more affordable. The key is that your income is different. It changes over time. So though the ability to do things changes, but if the price and inflation outpace what COLA you're getting, that's not in your favor, right? You end up paying more for the same thing. Now, let's talk about some of the additional benefits if you have a VA disability compensation. This does also go with a VA home loan, but not necessarily. Now, for a VA home loan, you get a funding fee exemption from it if you have a 10% or higher disability rating. Now, that rating, what's important to know is that, let's say, two examples. One example is that you have a 10% rating, you go in to buy a property, and you don't have to pay the waiver, or you don't have to pay the VA funding fee because you already received the 10%. Now let's go as a alternate. Let's say you filed for VA disability, you haven't received your VA disability compensation, but you're in the middle of buying a property, and this happens to a lot of veterans that are out there. In that case, as long as your effective date of your VA disability rating is prior to your closing date, right, the effective date, then you can reach out to the VA after you've closed, you charge the VA funding fee, and ask the VA to refund you that money. They will literally send you a check in the mail, and you can use that money for whatever you would like. Now, the other big benefit, which is a big driver for the veteran community, is receiving VA disability compensation. Now, that is huge because of property tax breaks. Now, I did a whole video on that in 2024. It still stands to be true. Not only that, you really have to be careful because a lot of new laws have been signed into 2025. And what I'm talking about is that, depending on your disability rating, you may be exempt from paying property taxes. Now, that can it significantly affect your ability to buy a property. In some areas, property taxes are outrageous, but in others, they're a lot less. So again, depending on where you're looking, home affordability is going to be a big impact. And I also encourage you in advance to check out what the property tax exemptions are, what they include, how they work. Don't just look at it from a state side. Go to the county assessor's office and also do your research, because they have different exemptions. If you're, let's say, coming off a deployment, but you don't receive disability, you can get a tax break. You receive disability, or if it's a surviving spouse, they can also benefit from those tax breaks, even if they're buying a new property. This is why it's important to understand your benefits, and this is why we do what we do on the channel, because we want to inform you, because you probably know other veterans out there, and I know there's a lot of misinformation as well. Another part of your VA disability, which is something you can get through the VA, is you can get specially adapted or specialty housing adapted programs that they offer. So in order to, let's say, when you purchase a property or you need to make repairs to it to make it fit what your needs are, you can also reach out to them. Now, there's some steps that you can take to see how this affects you. One, you can obtain your certificate of eligibility. You can do that on your own. Go to va.gov and request it. We have plenty of videos showing you how to do that. Or you can always schedule a call with me down in the description below, and I'm happy to walk you through that. You also need to explore state and local benefits that exist to you. It's tough, right? For, let's say, just like someone like me, where it's 50 states, plus you have all the counties within them, and all of them look at the same situation in a different light. So you got to do your research based on where you want to be. And while you do that research, you're also going to see, is this a place you want to live, because of the options that exist within those counties or cities, states, whatever the case may be. So make sure you guys do your research on that. Hit the like and subscribe button, and I'll catch you guys soon.